Thank you for tuning in to another edition of the VULCAN Report. This end of day report is for trading on, what is this? Tuesday, November the 22nd, 2016. Major algo shifts are taking place in the global financial markets. There is still a lot of uncertainty as to what a Trump presidency is going to look like, how it's going to affect banking and finance and stocks and interest rates, etc., etc., etc. So there's been a major shift, though, behind the scenes in these markets. The precious metals have been just attacked ad infinitum in order to finance the propping up of the US dollar and the US stock market. And this is being noticed around the world. Other countries are seeing what's going on and following suit. So where does that leave us from here with all this shifting around of the algo space? What is it that they're attempting to do other than prop up the market, and where do we go from here? Well, nothing has changed except for the person who's going to be in the White House. Right now, because Trump won the election, Trump's going to be the new president, but the financial workings are still the same. Nothing has changed. It's not a new Wall Street. It's not a new monetary policy. It's not a new monetary system. It's still the same business as usual. We're still in the same situation. Interest rates are still at all-time lows. They're still threatening to raise these interest rates, and doing it in spite of the economy being basically decimated and torn to shreds. They've been able to manipulate economic numbers that the government puts out, policing itself, so to speak. We know how that has played out over the decades. But since everyone's buying and drinking the Kool-Aid, unemployment rate, according to the government, is at all-time lows. Everything is great. Everything is great, right? So why not raise these interest rates? And you will see exactly what's going to happen when they raise those rates. It's going to hurt. This earnings season, earnings have been absolutely horrible, horrendous. Yet the market keeps going up, 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 up. Earnings have been so bad that they've had to change the way they do accounting so that they can show savings as earnings. Savings is not earnings. Savings is not revenue. Revenue is generated by sales, not from firing and laying off people, not from cutting back your expenses. All that is great and it affects your bottom line, but it is not income. You cannot grow your business just by cutting costs. That's not how you grow a business. You grow a business by increasing sales. It's not rocket science. Sales are not increasing. They make money by firing people. They make money by cutting back. And there are myriads of ways they cut back. For instance, the most primary way they do it, especially when it comes to the food and beverage side of things, is they give you less and charge you more. All right? Again, that's not increasing sales. Increasing sales is if I sold 100 widgets this same day last year, and today I sold 1,000 widgets. You can say I'm experiencing tremendous growth in sales because I've beat last year's sales at this time, or last quarter's sales. If this quarter I sold 1,000,000 widgets, but last quarter I only sold 500 widgets, you could say I'm experiencing exponential growth. I'm increasing my sales. And let's say my revenues from this is $1 billion, whereas last quarter my revenues was only $1,000. You could say, oh my goodness, dude is blowing up. That's what it is. That's business 101. We're not saying that though. We're saying all types of magician accounting, and that is supposed to be earnings and revenue. What a joke. So where does that leave us? It's not disaster. Excuse me. It's not economic collapse. It's down 19,000. Everything I just told you equals down 19,000. The futures are at down 19,000. Can you say Dow 19,000? Everyone that was giving dates of collapse, the Dow is going to collapse. The Dow is going to collapse. The stocks are going to collapse. The stocks are Shemitah this, Shemitah that. Blood moon this, blood moon that. Every notable speaker, the speakers rotate on these radio shows. They rotate. The same speakers all the time, saying the same exact thing, only to have Dow 19,000. According to them, the Dow was supposed to have crashed months ago, years ago even. They've been saying crash and the appearance of the abominable snowman since 2010. With the first flash crash of May the 6th, 2010, was supposed to be pandemonium and the appearance of the abominable snowman. The abominable snowman did not come. All right? Instead, we got Snowmageddon, but no abominable snowman, for those of you that remember 2010. So, fast forward to 2016, which is on its way out, and we have Dow 19,000. What did I tell you during the Brexit? I told you what was going to happen during the Brexit. It happened. What did I tell you the night of the election? I said, do not fall in love with this. This is not your crash. And I gave a basic sarcastic type overview of this, saying, all right, here's your crash. Here, you guys have been vindicated. Here's your stock market crash you were talking about. But what happened? I warned you that they were going to bring it right back up, and that's exactly what they did. They brought it right back up. I told you they were going to do that. I told you that. And here it is. This is what's going on. They crash a market before they balloon it up. This is what they do. They crash a market before they run it up. Once again, they crash a market before they balloon it up to new highs. Look how the market did absolutely nothing for weeks. Look at this. Weeks, nothing. Just sideways, not up or down, trading in the range, doing absolutely nothing. Not even breaking out or up or down, just in the range. And then here we go. Collapse. And then it's like pulling back on a bow and arrow. You pull back on the bow, or slingshot even. Better example, you pull it back and then you snap it up. There you go. Okay? That's what happened here. See, this is what I've been trying to tell you guys. This caused a major algo shift in the markets. It made a lot of computer generated programs reset. They had to go and they had to reset everything. This right here messed all their charts up. It messed all their patterns up. They didn't know what to do with this bar. They didn't know what this bar meant. I told you what this bar meant. Now you guys are gonna get your pullback. All right. This pointer is letting you know where the markets, where everything is. Once this low is taken out, you will be vindicated, because it will be taken out at some point. This is it. This is your sign right here, telling you this is what's going to happen. But let's examine more, because all this affects precious metals. Precious metals is the stepchild. It's the ugly stepsister in the room. All right, it's the stepchild that's beaten and locked in the closet and starved to death. That's what gold and silver is. That's what's happening to the gold and silver miners. They suffer on the back of the smashing of the paper metals market. And it does affect you that stack, even though you've been conditioned to think otherwise. You've been conditioned to think that this is just the paper markets, has nothing to do with you. Has everything to do with you, because the price of the derivative comes into play based on the paper market. So if you were to go and liquidate some of your portfolio, some of your holdings, because you needed to raise the emergency cash, boom, you would be taking a massive hit, and you need to know and understand this. That's why I've been telling you day in and day out, You got to learn to hedge your portfolio. You got to learn to trade these paper markets, because that's what's going to vindicate you in the end. So if they took gold down to $10 an ounce, you're not sitting there looking stupid because you got 1,000,000 ounces of gold that used to be worth $1 billion. Now it's only worth $10. You see what I'm saying? So you got to learn to do this. So if you play the game right, you're going to come out way ahead of everyone else who's just sitting on their hands saying, I'll just sit back and eat popcorn and watch everything unfold on television. Being passive only gets you slaughtered. Remember that. You cannot be passive. Period. Moving on. Where do we go from here? How is this going to affect the price of gold in the future? This algo shift is going to cause the Dow to go to 20,000. I believe that we're going to see Dow 20,000 before any major correction, before we even go back to this pointer. This pointer will be dealt with eventually, but not now. I do believe Dow 20,000 is what you are going to see. There are myriads of factors that come into place with this. There's a lot of moving parts, all right, in this situation. The interest rate situation, though, is the most tricky to be able to get a handle of. Let me show you what I mean by that just real quick. Let's see. I think we'll do, let's see, Z. Yeah, let's go with this one. Haven't traded these in a long time. These are your bond futures. This is your 30-year U.S. Treasury bond futures. All right. This is the big boy right here, okay? The big boy. All right. What you see on this chart is the systematic crashing of the bond price, right? Now, this is a good thing for the manipulators of the market, because they need to drive down bond prices in order to drive the yields higher. Are you listening to me? All right. It's an inverted relationship. All right. The higher the bond prices go, the lower the yields. All right. Here we go. The higher the bond prices go, the lower the yields. You got to keep bond prices high in order to keep the interest rates at zero. All right. If this were to keep going, then you would have saw eventually them talking about negative interest rates. All right. Just take a look at this. I just want you to see this. Now, this is a daily chart. If I pull up a weekly chart, what will we see? This is why people are calling for a December rate hike. Here was the low, and this was back in December of 2013, folks. The low was made in December 2013. Where are we going? Where are we about to hit now? We're about to hit December of 2016. 3 years later. You've been happy with the zero interest rates for 3 years. They've been threatening to raise the rates for 3 years to no avail. But now something devastating has happened. We've went from a bull market in bond prices to a straight up bear market. This is the beginnings of a bear market. Bear market. Bear market. They are going to be in trouble. Look at these prices. Look at the crossing of the short-term trend line crossing below the longer-term trend line, which is bearish. Yes, the cross is happening above the Kumo cloud, but you know what's going to happen. As momentum is pushing down and accelerating the sell-off, this is going to drop below the Kumo cloud. Once these lines cross below the Kumo cloud, we are now entering the full-blown bear market, locked in negative momentum, negative pulse wave. They will not be able to keep those yields from rising. Even though they know that rising yields is going to hurt the economy, rising interest rates is going to hurt the economy, rising interest rates is going to hurt the economy. They have no choice, as the bond market bubble is popping. This is a popping of the bond market. This is a red alert popping of the bond market. This is a red alert popping of the bond bubble. Let's see how this looks on the equity side of things. This is not a good thing. TLT, all right? TLT, iShares TLT. This is what we're looking at right now, all right? You do not want to see this drop in below the $120 a share. If it does, this would further accelerate the collapse. There is no support. I repeat, there is no support. There's no real support below the Kumo cloud. There is no support. There is no support. The nearest thing you can get to a support is going to be this, the 101.17. If we pick up on the momentum and these trend lines cross below the Kumo cloud, you're looking at sudden death, and the 101 will be in jeopardy. Bond prices can drop below par, just like they did when I was doing my Wall Street thing back in the 90s. We were trading below par, all right? You need to understand and know that. We were below par. This won't be the first time. So with this breakdown, this could really help. This bond picture could help accelerate the gold and silver picture. All right, here's gold. All right, it's following this trajectory. I still say that the downside is limited, but we still got to stay bearish until the correction is over. So watch the pulse waves to get back long on the gold. Same thing with the silver. We don't try to pick tops and bottoms. We let the market tell us when it's bottomed. All right, it hasn't bottomed until it's bottomed, but here we are. We're watching this. This is weekly charts, so there's nothing you can do with this just yet. Same thing with the JNUG. All right, you have to trade what you see. All right, it's below the Kumo cloud. Like I told you, it could drop below the Kumo cloud, but it's gonna slingshot itself right back up. And look at this upward slope. This is vicious. Look at this. This JNUG is gonna be on and popping again. I'm telling you. You just have to be patient. It's going to follow the trajectory. That's why you need the pulse wave price triggers, so that you can know not just when to get back into the market, but at what price should you be getting into the market. That's the key component, ladies and gentlemen. So, taking a also look at Nugget. Keep your powder dry. Have your orders working and ready, because here we are. All right, we're following the trajectory. This is a good thing as long as we can follow the trajectory without breaking down. We still have to stay bearish until the market is ready to correct. This crossing below is a bear sign. It's saying it's working on the beginning stages of a bear market. If this crosses below the Kumo cloud, that's also dangerous, but we have this upward trajectory. We have two huge ramps coming up. So as long as the market can do that, we'll be good to go. Just trade what you see. I know it's exciting to watch, but don't try to jump the gun. Just be patient and let the market lead you into where it's going to go. But I'm still excited about where I see gold and silver prices going, as the bond bubble seems to be collapsing and bursting. This should help to catapult gold and silver prices, and then we're going to be seeing those 1,000% returns. So just be patient. Just because it hasn't happened yet doesn't mean it's not going to happen. Remember, they have to crash a market before they rally a market. They crash a market before they rally a market. It's the way that it works. Greed is the thing that permeates the markets. The powers that be are greedy. They want to buy at the absolute low prices so that they could sell out to you at the highest prices. So when they know they have plans to collapse a market, they got to run it up first, like they're doing with the Dow. Run it up to 20,000, then see a 10,000 point correction. Same thing with gold. Crash it down to painful levels, then get in there and buy up all the shares and make it so that you can't even participate because it's jumping and skipping and they're raising the futures margins. All right? Please be encouraged. Well, we're going to track this, and you will know what's what if you come over to pulsewavetrading.com. Sign up for the weekly PulseWave price triggers, and soon I'll be announcing where and when you can sign up for the Academy, which tentatively I want to start it on December the 1st. We'll see how much work I can get done before then, and be set for the live webinar, which will have limited seating. So you're going to want to register. I think we're only going to open up maybe 40 slots because I can't have 1 million people in there. So you're going to want to register early when I give out the time and the date. So it's coming around the corner, so just be ready. Anyway, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.